And we're live. Phil Tarrant, Tom Panos, Real Estate Exposed, chatting about the stuff in real estate that everyone else is too scared to talk about or too touchy subjects. Tom, we've been great narrators, analysts maybe, offering insights and opinions on this great industry working called real estate, kicking off from the COVID pandemic back in March 2022 all the way through to where we are today in a very topsy-turvy real estate market, a market in flux. We only saw this week, Tom, as you're well aware, 50 basis point increase in the official cash rate, the largest in my lifetime and probably yours as well, or at least as a property investor or owner of property. The last time, Tom, there was a big hike like that. I think it was 1994 when Paul Keating jacked it up 0.4 or 40 basis points. And at that point in time, he copped criticism. He should have gone harder earlier. Maybe they've learned from the mistakes back then. But Tom, let's get stuck into it. What does it all mean? And my key sort of challenge and key thought process here at Momentum, we had our catch up this morning with our real estate team talking about what does all this mean. We do it every single week. Are agents as resilient as what they once were? Are we going to see an exodus from the industry because things are starting to get hard? Lots for us to discuss, Tom, and maybe no doubt you'll say some polarizing things which doesn't really resonate with people and they probably object to it, but that's Real Estate Exposed.
Yeah, well, I might hurt people with the truth, but I'm never going to comfort them with a lie. It's not my style, Phil. And whether it's a client or whether it's a vendor, a buyer, or whether it's a real estate agent, look, it's not doom and gloom, but it is scary times. And the reason why is that not only when you have a price decline, which is being triggered by interest rate rises, and by the way, Phil, this is a fact. The biggest drop in the stock market on record happened on Tuesday for 1 minute when everyone was shocked at the 0.5. So as soon as that announcement went, for 1 minute, there was the biggest decline that they had on record on the stock market. It corrected itself soon afterwards, but it shocked everyone so much. I think the Reserve Bank shocked themselves. I just think they weren't even, that there was not enough narrative leading up to it to actually say, we're going to go this hard. The people were saying 0.25, 0.4. So Phil, it is scary times. And the reason why it's scary times is when you actually get a change in market, you also get a change in volumes. And in real estate, you get paid for volume, how much turnover there is. So there is going to be less turnover. In New Zealand, for example, Harcourts, who are a very strong company in New Zealand and have got good records there, they're able to show the decline has been between 35 and 40% in volumes, right? And they've had about a 7-month advantage on the interest rate rises because they started in September last year. So Phil, what does this basically mean? It means that if you're a real estate agent, for the last year or two, you're going home and your money is being averaged out at, let's call it X dollars. Your family's based on that. You've probably bought a car in those 2 years. You may have invested in real estate. And it's easy to get into the pattern of thinking, this is my new fixed income. This is what I'm earning, right? Because if it happens for every month for 24 months, it becomes the norm. And then all of a sudden, you're going home and on the 15th of each month, you're getting X minus 30%, X minus 40%. Well, it all depends on what was that X to start off with. Because for some people, they'll ride it out. They'll just say, man, there are great years and there are good years, right? I'm playing the long game. It's all amortized. But there are some people that were borderline agents, Phil. They potentially were only earning $100,000 a year. And when you start saying, hey, your income might be halved, that's a big deal because you're going home to your family and you're looking at your monthly overheads, and then you're beginning to do a pro-cons analysis in your head and saying, hey, how long is it going to continue this way? and you might start looking at options outside of real estate. And that's starting to happen in the real estate industry.
Well, I think for a lot of people who entered real estate over the last couple of years probably thought, hey, this lark's pretty easy. All I've got to do is put a property up on online and I get $200,000 over the asking price. How easy is this? There's a rude shock for many, many people. And we're trying to get a sense for it here, Tom, at Real Estate Business. We're going to launch, and everyone look in the inbox. I'd really love for you to participate. We're going to launch just get a bit of a pulse check around this particular thing, Tom. How connected are people with their jobs right now? Because I'll tell you what, if you've gone from 100 grand a year to 50 grand a year, those people with those same skills and capabilities can probably go and court themselves a pretty nice salary outside of real estate, somewhere a bit safer, where they don't need to hunt every single day in order to put food on the table. So we want to get an understanding of is this going to be a flight away from real estate as a profession, which is in no one's best interest, I think, because we need quality agents serving Australian vendors, Australian buyers. But to your point, if there's a 30-40% drop in volumes, well, there's 30-40% less agents we need there doing the same amount of business if we want to keep everyone's earnings the same as what they were. So maybe we need to see an exodus. Maybe we need to see a smaller industry. Maybe we need to see this consolidation is going to be the catalyst for it, Tom, because it's going to be harder moving forward. If you can get involved, you help us know and let us know where you sit and what you do and whether or not you're going to stick out with real estate. We'd really like to share that information with people.
Okay, so what you're saying is you are putting out, REB is putting out a survey over the next week or so out into the industry, going to have a few questions that are going to sort of get a temperature check at where real estate agents are at. And
it'll take you a minute to put together, a minute to respond to it. It's a snap. It's a moment in time. How do you feel about this? How do you feel about this market? How are you reading it? What are you going to do about it? And I think, Tom, the key thing for all agents, if they choose to stick it out in this industry, is what are you going to do about it? You know, there's two things working in unison. It's the personal resilience around a tough market, but then it's the market itself and what you can do to best service vendors and potentially property investors out there if you're managing their properties. That's the big thing. You're going to make the call. Are you going to stick it out? I think I saw a post from you. I'll probably get this wrong, Tom, but tough times don't last, but tough people do. Or maybe, is that right?
No, spot on. Tough times don't last, but tough people do. And what's that basically say? That times aren't permanent. They have a start and an end date, and that certain people can endure that for a period of time. But there's a group of people, Phil, that are probably very vulnerable people that might not be able to endure a tough time period. You know, I'm particularly concerned with the real estate agents who entered the real estate industry at a time where there was high property price growth, there was fear of missing out, and it essentially basically said, if you listed a property, you could overprice it, you could put it on the market, you wouldn't have to do great marketing, you probably wouldn't have to have great communication skills with your vendor. You had this fear of missing out there in the marketplace that was creating sales. It's that vulnerable real estate agent that had only worked in booming times that I'm concerned about, because for the record, Phil, the reason why you can actually make a fortune in real estate without having a university degree is it takes a special person to be able to manage the gap between vendor and buyer. And that is normal real estate. You know, you got to be a negotiator, you got to be a deal maker, you've got to be able to handle tough conversations, you've got to have high product knowledge, you've got to have good influencing skills, and you've got to have resilience. Now, that is normal real estate. Abnormal real estate is what we had during the lockdowns, where the vendor and buyer meet regardless. And the role of an agent in that is not too much. They facilitate the process, but they don't do too much more. That's the agent that's very vulnerable, Phil, you know, and a lot of these agents have actually jumped in when the market was booming, but they also jump out when the market turns.
So this question is going to lend itself to your academic coaching background, Tom. You're a bit of a philosopher as well, and no doubt a lot of soul searching for real estate agents and real estate professionals in this current market. What are the three signs that you're vulnerable in this market right now? How do you know if you're looking at yourself? How do you know you might be one of those who are in this sort of this point where you're open, you're exposed, and there's either some tough times ahead or some tough decisions to make?
Okay. One thing is that you've noticed that you've got a lot of listings, but they're not selling, right? So you've got stock, but it's just sitting there, right? Because that actually shows that there are two issues. Number one, you probably overpriced it to get the listing, so you didn't win the listing on process. You won it by, as they say, the biggest liar gets the job sometimes in real estate. The second thing it shows, Phil, is that you don't have the process or the capability to do price adjustments to a vendor. So you haven't got the ability to take a vendor and get them to accept the reality of the marketplace. So there's two skill sets there that would show that you're struggling. So number one is having listings that you can't sell. Number two would be is that you're getting and it's part of number one is that your clearance rate has totally just fallen off the face of the earth. So every property you're taking to auction is not selling, right? It shows that you actually don't understand the auction process. The third one is that you might be also struggling to get listings. And the reason why is when scary times come ahead, Phil, consumers seem to resort back to what's tried and tested and has been in the market for a period of time that produces safety, right? So what you do see is some of the more sustainable long-term players actually grow their market share often, right? Because people resort to what they feel safe with, right? So another one is that all of a sudden you're not being called out as much because consumers start saying, hey, we need a result here. And probably the third one, Phil, would be your own feelings. You're waking up and you're feeling volatile, you're feeling anxious, you're feeling like you've got no control, you're feeling like you've got no solutions to this. And I've got people, which I think is not a great idea, they're saying, Tommy, I'm going to hop on a plane and I'm going to go overseas and I'm going to have a nice 2-3 month break and I'm going to let this shit show sort itself out. And they're running away from it, Phil. They're running away from the issue. Right now, I think vendors are looking for agents that are there. I think vendors right now are looking for agents that are making noises, that are actually causing a ruckus. That's what they're looking for. I don't think they're looking for an invisible person. And by the way, if you are that agent that's listening to this podcast or watching the live stream right now, my experience is if you hop on a plane and think to yourself that you're going to come back in a couple of months and everything's going to be sorted, you're actually going to have a bigger problem because you're going to have the original problem, which you haven't accepted the current market, but you're also going to lose market share because every time you go away, Phil, you sort of lose momentum, right? So I don't think that's a great strategy.
So how do you work out whether or not you got the bottle for it then? When do you throw the towel in? When do you just go, yeah, I ain't got it in me. I'm out of here. What's the inflection point?
Great question. Because I actually reckon quitting can be a success strategy. I think sometimes I look at my own life. I look at my own life and I think to myself, you know what? Quitting would have been a good strategy at that point. I remember relationships. I remember I overstayed a relationship with someone that wasn't right for me when I was a lot younger, and I overstayed it. Quitting would have been the right strategy a year earlier there, right?
Oh, I thought you were going to talk about this relationship, Tom. I think there's still some legs in it, mate. We're not going to break up live on air.
No, we won't break up live, Phil. We're only beginning, Phil. Who knows? We could be doing this. We could be doing this in 30 years. You'll be in your nice place by the countryside there on the Central Coast, and I'll be in Byron Bay, and we'll be talking about what's going on in the world. But you know. So I just think that the strategy of staying, like, I think fundamentally you've got to turn around and say to yourself, have I hit a brick wall or is it a speed hump, right? Because a speed hump you can go over, right? A brick wall is, man, I can't get through this. How do you know? I think you've got to give it a serious crack before you quit. And you turn around and you speak to your principal, your boss, because we're talking about we're talking about um, agents, not principals here, right? We're talking about agents. I think what you do is you turn around and you sit with your principal and you say to your principal, hey, listen, I'm getting nervous. There's some scary times ahead. I want you to give me an assessment of my skill set. What do you think of my listing presentation? What do you think of my prospecting skills? What do you think of my vendor management? What do you think of my digital social media skills? And you go off and you see how real estate fit are you right now, right? And then you turn around and say, okay, I need a bit of a renovation plan here. I've got to upskill. I've got to improve. So you go and you raise your standards in each of those components. And then what you do is you give it a serious crack. And at the end of it, if you are still struggling, you might have to turn around and accept, hey, this is brick wall stuff. But I actually think there's not as many brick wall people as there are speed hump people. I think the great thing about real estate is you could actually change the trajectory. You might actually use this opportunity. What do they say, Phil? Some of the best gifts in life come badly wrapped. This might be the opportunity for you to have the tough conversation with yourself.
And I'm happy you spoke about that, Tom, because, I don't want us to be the merchants of doom and gloom and a defeatist attitude, because it's not the way we're wired. I like to think we both see the opportunity in all circumstances. So this should be framed as a real estate agent is, okay, let me accept this market right now, and what do I do about it to be the best that I can in my market? And that's where we should really be concentrating this discussion, Tom, rather than the defeatist attitude that we might have had up until this point in time. But I just wanted to mention that, Tom. These are the markets. It's where there's change and where there's flux and there's distress is where growth happens. And this is the market we're in right now.
Yeah, well, even our viewers are typing comments that support what you just said. And that is, as Warren Buffett says, when the tide goes out, that's when you work out who's been swimming naked and who's had their swimmers on. So, hypothetically speaking, let's assume that you are someone that has your swimmers half off, right? The good news is you can actually change that. You can change. You know the thing I like about real estate, Phil? Mortgage broking is the same. By the way, I can't help it. I'm looking at you wearing your managed hat there, because mortgage broking is exactly the same. Yeah, you had a good. You guys had a very good write up in the Fin Review during the week, didn't you? What was that about? There was some story there.
Yeah, for managed. So managed is our. We invested at Momentum, our platform for property managers, which has direct and automated payments. So it just essentially removes a trust account. Hugely innovative. Got a good write-up. The CEO, Nick Burris, good write-up in the Fin Review. The platform raised a whole bunch of more funding to accelerate its next round of growth. Tom, two key funders, REA Group, as most people will know, and also Momentum Markets, which is the corporate business of all the Momentum businesses like Momentum Media. So, pumped in another 5.3 million bucks of funding to accelerate that. It's now seen as big three in terms of property management platforms. So things are flying along, Tom. Thanks for mentioning it. I didn't really want to plug out of it, but it's good, mate. It's been a really good, interesting experience through Manage, watching the sector, the property managers embrace change and importantly principles. You speak about them before, and this market, I'm telling you, Tom, I guess it's connected. The flight to rent and the strength of your rent roll in markets like this is absolutely critical for most real estate agencies and franchise groups. It's when sales volumes change that your rent roll is pretty much the thing that keeps putting consistent money in your door. And I know a lot of principals now and a lot of property managers are really working closely with their investor clients to make sure that they're fully connected with their investment and how they can amplify that. So yeah, mate, thanks for mentioning it. Yeah, good story in the Fin Review. And it keeps getting at it.
Well, the mortgage brokers and the real estate agents are similar in the sense, and everything we've spoken about today, by the way, applies 100% to mortgage brokers. It's exactly the same. Volumes, like, think about it. Homes being sold need mortgages. Less homes being sold is less mortgages, right? So it's exactly the same. So stands to reason everything we're talking about is relevant to mortgage brokers. But here's the exciting thing. If you're a real estate agent or a mortgage broker, it's not a slow burn. Within 90 days, you can change the trajectory and the momentum of your business. It happens quickly. You get yourself 10 good listings. Those 10 good listings bring you another 10 good listings. And those 10 good listings bring another 10, bring another 10. And before you know it, within 90 days, you are the agent that is running the marketplace in your area. So, that's quite different to what it takes in let's call it in the telecommunication business, where often you're working on a project for 3 years, right?
Yeah, mate, it's different. It's the immediacy of real estate, which makes it hugely attractive. You are the master of your own domain. You're the captain of how you want to go about approaching your success in real estate. So if you choose to take action, you choose to get busy, you get very busy. Now, Tom, let's talk about mortgage brokers very quickly. Some information come out just recently that mortgage brokers now, Tom, you might not be aware of this, latest stats account for 70% of all loans written in Australia. The sector continues to grow, reinforcing the roles that mortgage brokers play, in particular for supporting Australian consumers, whether they're owner-occupiers or investors. But Tom, I'd like your insights on this, because 50 basis point increase to the official cash rate. I think all of the major banks came out today saying that they will pass it on in full. So every single Australian with a variable rate mortgage, or most Australians with a variable rate mortgage, will have to pay another 50 basis points on the interest payments on their properties. Now, the average sort of loan, $500,000 or so, it's like $120 a month, I think, more you'll pay because of the 50 basis point rise. Now, the best mortgage brokers I know, Tom, they're getting on the front line and they're connecting with their current clients and those people who they've originated home loans for, because the opportunity is huge for mortgage brokers to really show their abilities as advice practitioners supporting Australians get the best loans for their needs. Because when rates start going up, lenders start getting very, very competitive.
Well, Phil, let me just touch on that for a moment about what you just said. I don't want to turn the conversation away from, assessing the opportunity that mortgage brokers have. But I've got to tell you, Phil, I'm giving an absolute lowest possible score. I'm giving a C- to the Reserve Bank of Australia. I'm giving a C-, right? Because I think the Reserve Bank was so shocked itself in the last few weeks on what it's doing. Here's the deal, Phil. I had a client reach out to me that bought a home in January on Instagram. And, they were a really nice couple. They started following my content on social, and occasionally they send me a message. And she sent a message on the day of the interest rate rise. And she said, Tom, do you know when we bought that property in Revesby, we bought it based on the fact that the Reserve Bank said they weren't raising interest rates till 2024. Now, look, I wouldn't be buying a property based on some commentary in a newspaper article. But the point is, that was the narrative that was happening in January. Do you remember, Phil? They were saying,
I do. I remember it well, and it goes to show how quickly things can change. And I would say to those people and to everyone who are buying property on the basis that there's not going to be no rate changes, that shouldn't be the catalyst for buying property today. You need to make sure that irrespective of market conditions, you can still afford your mortgage. That said, also, Tom, we only saw last year, was it last year or early this year, where they changed the sort of mandatory buffer from 2.5 to 3%. So banks are assessing you on your repayments with the loan being 3% higher than what it is, right? So there's a natural buffer put into real estate. So you're seeing all this rhetoric now around people who are redlining. They're not going to be able to pay for their mortgage. Well, Australian balance sheets, you're led to believe, are the strongest they've ever been as a result of COVID-19. Whether or not I want to score the RBA, that's a bit outside my jurisdictions, but I do note they said there wouldn't be rate rise until 2024. Now, I'm reading a lot about this right now, Tom, and we spoke about it quickly last week around this sort of notion of stagflation, and I probably didn't, define it correctly. So go and Google and check it out. But essentially, it's rising inflation without the mechanics to increase your salary quickly to go in lockstep with it. Now, a lot of readings I'm seeing coming out of America is that a lot of the underlying reasons why we've had this the inflationary environment is starting to neutralize. So we had pretty high rates, 5+% in that last quarter. They're now saying that there's not a lot more that's going to happen to exacerbate a continued upward pressure on inflation. Things are starting to normalize. They're starting to see indications things starting to normalize. So some economic forecasters are saying that reserve banks around the world, Western world, will go hard and push up rates quickly, but they'll be quick to bring them back down again. We need to remember that this inflationary environment we're in right now is exacerbated by a whole bunch of stuff that's happening outside of Australia. Increased cost of food and fuel and fertilizer and supply chain constraints for products coming out of China. So they are saying that it might go hard early, the reserve banks, but they'll bring it back in time. So look, scoring the Reserve Bank on that basis, maybe you got to score them an A+. They're moving quickly, Tom. Some of the criticisms around the Reserve Bank in the past has been it hasn't moved as decisively as it should have, and I think they're probably learning from their mistakes of the past. So I don't know if you're being fair, mate.
So here's my view. My view, Phil, is that they were slow to move at increasing them, and they could have increased them in small amounts. It's a little bit like trying to lose fat. You're better off actually having a balanced approach gradually than hitting a crash diet at the last minute that isn't a healthy thing to do. Now, maybe I'm giving them a very low grade, and over the next 3 or 4 months, we begin to realize that the action they've taken has reached the desired effect. But there's a feeling out there that we've got 6 months left this year, and that most of those months are going to have rate rises attached to them. I mean, there's now talk that the next rate rise might be as strong as the one that we've just had. Phil... So,
Tom, you've got to remember, mate, the only way it was up, we're at 0.1%, lowest interest rates in the history of keeping this stuff, right? The only way was ever up, and we're moving into a more normal interest rate environment. You need to remember, why were the interest rates down where they were? It was this thing called COVID-19, mate. It was already low prior to that. And it's look, we're not economists. We're just a couple of guys that, to use your term, borrowed term, jibber jabber around real estate, try and give some sense to it, Tom. But this comes down to, what do you do about all these interest rate rises if you own property? What do you do about all these interest rate rises if you're a mortgage broker? What do you do about if you're a real estate agent? Well, different tactics for the different sectors. But number one, mortgage brokers, great time to be a mortgage broker. This is when you can really show your value in ensuring that your current clients and your prospective clients have the best mortgage available to them at the right rate. There's going to be a lot of competition out there, so get busy, because it'll be heady times for mortgage brokers. We're seeing it now on the advisor, Tom. There is literally banks already ramping up their competitive rate. There's going to be a whole bunch of different incentives coming out to try and position one particular mortgage over another. So it's good time for Australian borrowers. Start looking at your bottom line. Start thinking about trimming some of your own fat now before it becomes an emergency, using your analogy. Remove those unnecessary costs. Cut back on your Uber Eats. Cut back on your subscriptions. Start factoring in another 50 basis points, another 100 basis points into mortgages. Get set for it, because it's times like this, Tom, much like real estate agents can thrive in this market, property buyers, property investors can also thrive in these markets. There's going to be a lot of opportunities out there for investors moving forward who are finance fit, who are finance ready, who are ready to go. And I hope every single mortgage broker listening to this and every single real estate agent is getting ready to capitalize on their hard work as professionals to invest in real estate, Tom. We talk about this all the time. Not enough property professionals actually invest in property. This could be the moment.
For me, the big opportunity, Phil, is going to be in commercial, because what happens is people that buy commercial real estate buy purely on yield. So, and they're always looking for a buffer between the return and what they're paying money. So when money goes up, and let's assume it's gone up 0.85%, let's assume by the end of these interest rate rises, it's gone up 2%, which is potentially a likely scenario. Essentially, what's going to happen then is, if you're a buyer of real estate, you still need to buy with that gap of that 2%, which means that the asset that you're going to buy has to reduce in price dramatically for you to still be getting that buffer. So that essentially is going to mean that there are assets there that are going for, 6-7 million that are going to reduce in price by millions of dollars if someone wants to sell that property, right? You might hold off. You might be in a situation where you don't want to sell, or you don't have to sell, or whatever. But there's going to be the opportunity, and I do feel for some of those commercial buyers, because there was a heap of people that were not traditional commercial investors that over the last year or two went down the path of commercial investment. And you often saw that, these great real estate companies were marketing commercial property with long yields. They really dressed them up to sell them, and they were getting incredible returns. We saw childcare, we saw service station, we saw, medical practices, right? So they became really attractive to an investor. Now, these assets are going to be repositioned, and they're going to create great buying opportunities. And that's what you do. You buy at times like that. And then once rates go down again in the years to come, you find that asset goes up in value. So
you think about commercial right now, Tom, and I'm buying commercial at the moment. I like commercial at the moment. You're getting the structural. If the leases are good, you're getting the structural uplift. Annual reviews normally on the rents based on a CPI, right? So you got guaranteed, largely guaranteed. If you buy the right assets, guaranteed uplifts on your rents, which should counterbalance some of the increases in the cost to hold the property if you have a mortgage on it. And guess what happens? That's not going to come backwards and reset once interest rates start coming down. And to your point, you're going to get the double whammy on it. It's good times, Tom. Good times.
Absolutely.
But I do acknowledge that there is some people doing it tough right now, and will do it tough. And again, I think the best mortgage brokers are those which are actually talk to their clients, and you can fix problems you have in terms of financing. Sometimes you might need to sell your property. You only really realize a loss in real estate when you sell. So you want to try and hold on as much as you can. And a good mortgage broker can help you do that, whether it's debt consolidation and using. So a lot of Australians right now have a lot of equity in their homes, Tom. There is ways to remedy if for those people who are struggling. So, keep your ears out for those that are like that and see if you can support them.
Well, listen, I'm very, very, very curious to see what this Saturday is going to be like in the world of auctions. I want to see whether the impact of the rate rise has a direct impact this weekend. One thing is for sure, the numbers of cancellations prior to auctions gone extremely high. In fact, the report that I saw during the week says it's actually doubled. So the amount of properties that are being pulled off auction has doubled.
And Tom, give us some sense for that. Because we'll probably do a whole podcast on it. Is that people saying, well, we're going to sell this to buy a new property, but we've decided not to sell now and play it safe and stay where we are? Is that the logic behind that?
No, I think what it is, normally with a week to go to auction, the real estate agent has a vendor meeting and says, listen, I don't have a buyer. So I've noticed the trend, actually, just before I got online with you. I had one with an office in Gladesville. They've pushed the property out by 2 weeks. So people do a couple of things. They either cancel it or they buy another 2 weeks up their sleeve to see whether they'll pick up a buyer in the next 2 weeks. But generally speaking, Phil, I think what it is the real estate agent and the vendor don't want to show up on a Saturday auction day with no one there. So they take the narrative away and they cancel the auction. And they'll normally say that we're going to deal individually with private buyers. That's
a good point here, Tom, to my point around opportunity for people buying property. Just by showing up, sometimes you can get yourself a bargain. I've bought properties like that when no one else has rocked up, and everyone's invested to sell, and you just get lucky sometimes. So don't underestimate luck in real estate.
100%. I've seen it time and time again. There's no one else at the auction. There's a person there. They haven't even seen the property prior to the day. There's a vendor that's totally motivated. There's a buyer that's there. No competition. They give a ridiculous offer. The owner's got to sell. And then on Monday, Tuesday, the real estate agents are talking about, geez, that was cheap. Well, get out there. Put your big black duffel coat on. Whack your Ugg boots on. Get out in the cold. Because it might be a cold, dark winter, but there's going to be a few winners.
There you go. There's another Tom Panosism. We'll conclude with that. Tom Panos, coach for the Real Estate Stars, Real Estate Gym.
Yes.
Coach and trainer at realestatebusiness.com.au. Thanks for all your contribution, Tom, and helping not only interpret this environment they're in right now, but help shape the actions and attitudes of many real estate agents. I know they rely on you, and I can say thanks on all their behalf, mate.
Well, I'm not going overseas. I'm going to stay here, Phil. I can see there's action. I can see there's appetite. I can see that, and trust me, whenever there's problems, there's opportunity for those with solutions. I'm going to hang around in this cold weather. There is a big exodus of agents and non-agents. There's a lot of people that are dying to get overseas, right? Whether they're going to Bali or whether they're going to Europe, there's a heap of people.
Mate, you can't get a passport now. There's lines a kilometre long to try and get their passport sorted out. But anyway, we'll keep at it, Tom. Thanks for your time today.
Thanks a lot. See you, everyone. We'll see you next week.
See ya.